the funny part about the logic of like they're buying crypto to buy traditional assets is I do think there is some logic to that in a limited sense. Like I don't think people are going to sell crypto to buy stocks, but I think people are buying, in some
Houses.
exactly. Like they're like houses are so fucking expensive and we have no shot to ever buy one that the only way that I can possibly have that chance is to be early to crypto. And, like I think that says a lot about where people's heads are at in terms of, they're willing to take chances. They're willing to do whatever it takes just so that they could buy a house like their parents did. And still, like, most of them are not going to be able to do that. Pretty wild.
Hey everyone, this episode is brought to you by Sei, the blazing fast parallelized blockchain which is unlocking Solana-like performance for the vast ocean of ETH devs out there. Now, you're going to be hearing all about Sei and their new V2 upgrade, but if you take away one thing, the EVM is here to stay. There are some problems with it, which we're going to get into later in the episode, but Sei, and especially their V2 upgrade, is helping solve that. So thank you very much, Sei, for making this episode possible. Hey everyone, wanted to give a quick shout out to this episode's sponsor, Flood Protocol, the optimal DEX aggregator. Now, if you are a listener of Bell Curve, you know that MEV is a massive problem, which is why we are so pumped to partner up with Flood on this season. Flood is the only gasless and MEV-free aggregator that not only gets you the best execution, but also gives you back all the extra surplus that you create every single time you swap. Now, this is relevant for both swappers and developers, but you're going to be hearing all about them later in the program. So for now, thank you, Flood, and back to the show.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2, Vance. All of us consensus list this week. Fellas, how we doing?
Doing well. Doing well. It's probably hot in Austin, by the way.
Toasty.
It's hot in San Francisco. It's nice.
It is. Global warming.
What have we heard about consensus this week? I saw Selkis and Marvin Amori, I don't know how to pronounce his name. He's the general counsel at Uniswap.
Uniswap. Chief Legal Officer, General Counsel, Uniswap Labs, Uniswap Foundation. Can't remember which one's for each, but I think it's Uniswap Labs. I obviously didn't hear the debate, but the debate premise was crypto is bipartisan, as represented by Marvin, and crypto is partisan, as represented by Ryan. And I think we probably have a perspective on where Ryan falls on the partisan side. But I think the takeaway that I had just from that, reading the fact that there is a debate going on at consensus, is like, there's actually a debate to be made right now. Whereas 10 days ago, no one would take the Marvin side. But at least now there's the possibility of having that conversation. I still think, and there's been a number of other, perspectives that came out after that debate was promoted on Twitter, of just like all the things that the Democrats are still doing to prevent crypto. And the list is still vast. Think about all the lawsuits that are going on, the Wells notices that have been delivered to foundations or different companies that are issuing networks. All the while, you have Hester Peirce sitting on stage, also at Consensus, talking about how we need to build a regulatory sandbox between the U.S. and the U.K. so that we can have, innovation exist and not, unfairly overly regulate early stage companies as they're trying to, get to the point of decentralization or get to the point of regulation that they would need to be. So I think all of this is, once again, just continuing with the movement in the right direction. But it's going to be interesting to see how all this plays out. There was also the rumor that the Biden administration in the last 2 weeks has started reaching out to people in the crypto community. I don't know what that means, who that is, but asking for insight, asking for perspective on how to work with the industry. So I'm sure that the debate between Ryan and Marvin was a good one, but it still feels like the Democrats at least are playing pretty deep catch up here.
Yeah, and I think the Selkis position is obviously like very Republican. The Marvin position is very Democrat in some ways, but it's more like Marvin's not an idiot. He's a very smart guy, and I think it's more so like, look, we've got this Elizabeth Warren-sized problem in the Democratic Party, but all of these Democrats are not created equal. Like you have people like Richie Torres, and you have people that are reasonable that have voted for things like Fit 21 or the SAB repeal, and so like he does have some pretty good points. But I do think there is an element to like you have to call off the dogs on like the list of things that Scott Johnson put forward, which is very long. But also like you have things like the industry sweeps, the RFIs, like those are just like, like they're technically, optional, but if you don't do them, you're in trouble. And so like those things need to stop, but I don't know. I don't blame people for thinking it's just too little too late. Like we've now got, 4.5, 5 months until the election. I don't know. Hard to undo 4 years of damage in that span of time.
I think the interesting debate to be had around this, and I saw Jeff John Roberts did some live tweeting. There was a thread we can link in the show notes where he gave the high level, but the Selkis argument boils down to Trump is with us, and generally the Republicans have been much more pro crypto. And if you look at the way that tech gets adopted, it's mostly this sort of partisan issue. And then what it sounded like Marvin was voicing, it's hard to know. Everyone's got their own political bias here, so it's hard to really know. It's like, do we really want to be neutral, or are you just actually more left-leaning? But his argument seemed to be like, we don't want to make this a partisan issue. These issues rotate across parties over, year-long period anyway. Like we should just have this be a nonpartisan thing. I still am not 100% sure where I fall on that. There, it seems like there are some industries which are like Silicon Valley is like very left-leaning. There are other industries like the gun industry, which is like super right-leaning. But then there are a lot of industries that kind of fall somewhere in the middle of both of those two things. And so,
how would you describe the finance industry?
That's actually the one that I was thinking. I don't know. I think it's actually pretty bipartisan. Like I used to think of it as much more right, but I kind of think of it as pretty neutral for the most part. What do you guys think?
I think it's one of the few industries that you can point to and say it's the size that it is, but it also has members of that industry with the individual influence that they do have on both sides of the aisle. I actually think my like perspective here generally is that over time, crypto will become more and more bipartisan as more and more people recognize that it's just a technology and it's just an industry. And frankly, it represents growth. I think for the time being, there's been this miscalculation on particularly the Democratic side about how this industry is perceived. Maybe it's a lack of understanding of the technology. Maybe it's a lack of understanding of the potential of what it represents. But over time, I think people will start to recognize that this is just a technology. It's something that will improve finance and financial services over the long run, and that should exist in the United States, period, full stop. And not something that gets pushed outside the United States inherently. But I think, what we're talking about here is whether or not we frankly have enough time before November 5th or 6th, whatever the election date is. I think that's the big question at hand, and I'm not sure that we do.
The hour grows late on the reconciliation efforts, but like the other thing is that early voting starts in September.
Right.
Yeah.
So it's like, the election's 5 months away, but like the election's really like 3 months away. And from a news cycle perspective, the election is a month away. Like as debates start, it's going to be all you see. If it's even possible to see more of it than like the Trump trial, I think it's just going to be mainlining, all this stuff.
The other thing I'll add here is like I know we're kind of like using the election as a euphemism for the presidential election. There are so many other elections that are important to crypto that are going on where it may be a senator, a congressperson, or even local elections that will come up in November. And I know one thing that we should talk about is I saw both Ripple and Andreessen committed another 25 million. I'm not sure if that is in addition to what they've already put in, but I mean that builds a massive war chest for Fairshake. And Fairshake, I know, is obviously focused on some of the more presidential level issues, but they're focused on a lot of the smaller campaigns as well. And people like Richie Torres in New York, Ron Wyden, who's a pro open source senator of Oregon. There are people in California that are pro innovation. I know Ro Khanna from the San Jose area is a representative down there. Like there are a lot of positive perspectives on both sides of the aisle when it comes to Congress people or senators. And I think that's, the other big call out here. It's not just Democrat versus Republican. It may be that perspective on the presidential side, but it's definitely not when it comes to Congress.
Yeah. I think we talked on last week with the ETH ETF approval that there might have been a little bit of a loss of innocence at the SEC that, Gary Gensler had been making all these technical arguments about why they couldn't pass ETH, yada, yada. And then as soon as the political wind shifted, it was like, oh, none of that actually matters. It's like, well, and wait, is this really how it works and what we're all doing here? There might be a little bit of that with crypto as well, which is like, oh, there's $100 million behind this. Suddenly these arguments are sounding a lot better and the politicians want to get involved now,
Wonder how that happens.
Funny how that happens. But you know what, there was also another, Michael, you made a really interesting point just there about growth, about recognizing crypto as a growth industry. Did either of you guys follow Joseph Wang or Fed Guy on Twitter?
Yeah.
Yep.
Yeah, he used to be a trader at the Fed, and he wrote this piece this week that I thought was super interesting. It's called Crypto Rebalancing. As far as I know, this is the first time that Joseph has ever written about crypto. And the argument that he makes is turning bullish on crypto, but the idea is that actually there's a lot of wealth that gets created in crypto, and crypto investors tend to be primarily momentum driven. And part of what's giving crypto momentum right now is exactly what we're describing. So there's been a change in the winds politically in terms of crypto. You've got people like the Wisconsin State Pension Fund that are buying. He makes this really interesting point here, which is that there's, I guess, good evidence that when crypto people generate wealth, they actually rotate that a little bit into equities, but primarily into housing. And he makes this argument actually that as wealth is generated in crypto, it's going to be a tailwind for TradFi assets also, which is
Okay.
I mean,
lost me there.
Yeah. It's basically, yeah. So, but I mean,
Well,
look, it's just an interesting argument. I haven't seen this kind of stuff come out of.
First thing about Joseph Wang is that, I think this is first half. I think this piece is great. Second half, TBD. But he doesn't really miss on his calls, or at least
he's great
in the past 2 years. So I think I would take this very seriously. But I think it's a very simple story where it's just young people and more diverse people like crypto more. And I think you can whatever window dressing you want around it, or write whatever article you want to explain it. But it's very simple. The outcome is just this asset class is very popular and it's not going away.
So I haven't read this article. This is the first I've heard of it, but I will. One question that I was actually having a discussion about over the weekend was, what do you do we know any of the socioeconomic breakdown or status of people who own crypto? And the numbers that have come out of the polling, I think that Paradigm put together was 30-something% of people between the ages of 18 and 45 on crypto. What we do know is that 51%, the top 51% from a socioeconomic status in the United States, or the same demographic, own stocks, own equities. It's a lot harder to find, similar breakdowns for housing. But it's interesting to think about, is this something, and what that chart that you just had up there might suggest is that the people that own equities are the highest owners of crypto as well. And what that implies is that it's not it's the more wealthy participants in the economy that are the biggest owners of crypto assets, just as they are the biggest owners of stocks. And you would expect that to be the case, but it's not like there's a massive divergence between asset classes, which I think is some of the narrative that you hear about with crypto, that it's it's for $500 trying to punt it around to make 50,000. But I think what we're starting to see here is that this becomes an asset class that investors view in the same way that they view equities, which I think is a major, divergence of what, the narrative has been.
Yeah, I've always, people talked about Bitcoin for a long time as being this like uncorrelated asset, and that was a really attractive narrative for a while. But I think that if crypto fits within this broader allocation bucket that these huge pools of money have, and people start to think of it within a framework, I think that's not a bad thing. I think that's a good thing for the most part. It's kind of like graduating.
And think about it in the same sense of what's happened over the last, I guess, 20 years, give or take, is you've gone from 40,000 publicly traded companies to 4,000. And a lot of the consolidation, the growth that's happened in the economy has been concentrated in a much fewer set of opportunities to invest in on the equity side. Whereas this represents something that's new, it's a new asset class, it's, in the process of being defined as one, probably with some sort of regulatory change. And it's obviously skewing towards younger people because they're internet native. And so they're going to obviously get this first. But I think that this becomes kind of a new asset category, especially for the biggest participants who are going to become the biggest parts of the electorate over the next decade.
I agree with that. And I was just reading, I don't want to do this live here, but I saw this, what Joseph was linking there, linked to a broader study about who owns crypto in the US. And with the exception of people who adopted early and basically made a bunch of money, it just mimics like what equity ownership looks like, which is interesting.
The funny part about the logic of like they're buying crypto to buy traditional assets is I do think there is some logic to that in a limited sense. Like I don't think people are going to sell crypto to buy stocks, but I think people are buying, in
Houses.
some exactly. Like they're like, houses are so fucking expensive and we have no shot to ever buy one, that the only way that I can possibly have that chance is to be early to crypto. And, like I think that says a lot about where people's heads are at in terms of, they're willing to take chances. They're willing to do whatever it takes just so that they could buy a house like their parents did. And still, like, most of them are not going to be able to do that. Pretty wild.
That's what I was going to say in the study. That resonates with me. It doesn't quite pass the sniff test that I know a lot of people that like take their crypto gains and rotate into equities. I just feel like that doesn't happen quite as much, but it definitely happens that people take crypto gains and rotate that into real estate. Yeah. So
the barbell strategy, a commonly used one.
Yeah. I mean, it's interesting though. Like, if you've ever sold crypto and put a bunch of cash in your bank account, you have this moment where you're like, yes. And then you're like, wait, what do I do with this? Like, do you go buy a house? Like, you're going to go buy like, Magnificent Seven. You can go look like at an equally bad basket of like traditional finance investments. Like, at least with a house, you're like, this is my house and like no one can force me out of here and I don't have to pay rent to anybody else. But like the thing you realize when you sell crypto, if you ever have, is that there's really not great investments anywhere else. And also like you have zero edge in those other assets.
Yeah.
So speaking of great investments, do you guys see Iggy Azalea launched a meme coin this week?
Where can we get a price chart of where this thing's at today?
Yeah, let me grab it. I would imagine you gotta go to Deck Screener for something like this, but yeah, and I guess there were actually two. All right, so there were two different celebrities that got involved with meme coins. There was Caitlyn Jenner, who I saw a tweet out about Pump.fun. Do you see this? And then there was Iggy Azalea, who's been going ham, and there's the sanctioned Iggy Azalea meme coin, which is Mother, and then there is another one which is Iggy, which, not gonna lie, I didn't look too deeply into this, but is apparently not the legitimate Iggy Azalea meme coin, if such a phrase can be said.
The wrong Iggy Azalea meme coin.
Hey everyone, wanted to give a big shout out to today's title sponsor, Sei. Now, I want to talk to you guys a little bit about why I think Sei is cool from a design standpoint, a big problem that it solves for ETH devs out there, and then some cool stuff that Sei has coming up. The reason I like Sei from an architecture perspective is, again, it's a very fast blockchain, parallelization, all of that stuff, but Sei has essentially been custom building block space, which is for consumer apps and dexes. Now, they have some very cool features which enable that. So twin turbo consensus, optimistic parallelization, Sei DB. All of this stuff allows you to reduce the time to finality, make for very, very fast transactions. So if you're building a consumer app or a DEX, this is basically the blockchain for you. If you've been building in the EVM, you love the EVM, but there are some restrictions about it that don't support your app. So maybe you can't do fast enough transactions, or it's not parallelized, whatever it is, you can now take all that stuff that you built. You don't have to start from scratch, and you can build it on Sei. Now, recently they've launched V2, but also public devnet. So the way that you can follow that and keep up to date is go and follow Sei Network on Twitter. All right. Thanks, guys. Hey, everyone. Want to give a quick shout out to this episode's sponsor, Flood Protocol, the optimal DEX aggregator. Now, Flood is the perfect partner for this episode on the multi-chain future because Flood is solving so many of the issues that we're going to be talking about this season. And this is relevant for both traders and devs. So if you are a trader, you should definitely head over to FloodSwap and start trading because they solve 3 massive problems. 1, gasless trading. No more pesky trading fees. 2, you don't have to worry about getting front run. MEV free. And then 3, they have excellent order routing so that you know that you are getting the best price. So head over to FloodSwap and click the link in the bottom of the show notes. We're going to send you right there. For the devs out there, you can leverage Flood's flexible hooks, allowing you to make swapping a first-class primitive by adding custom order types like TWAPs. Or if you're a wallet builder or something like that, you can actually build your own order flow auction in and start recapturing a bunch of that MEV. If you want to reach out to them, go to devs@flood.bid or just jump right in the Discord. All right, guys. Thanks very much. Appreciate you, Flood.
I'm looking for the chart here, but what do you, I mean, this is what people have been basically arguing about, which shows you how little is going on in the industry at the moment. But what do you think about this? Because I saw a bunch of people tweeting the old Kim Kardashian SEC, indictments and stuff like that. And then some people are like, oh, this is mass adoption. And maybe it's, who cares? Why would you be upset that Iggy Azalea has a meme coin? But what do you guys think?
Well, we're down almost 75% in less than 24 hours. It's an $8 million market cap meme coin. And I think it's very instructive as to where we are in the cycle. You can pinpoint it almost exactly. Celebrities know that they can make money doing these things, but they don't know that it's illegal or some sort of, law has been broken. And remember when Gronk and Kim Kardashian and all those people were doing those promos, and then
they've all settled.
And then literally 3 years later, they settled for 10 times the amount that they got paid. That's exactly where we are.
And the funny part is, yeah, exactly. That is not a bullish looking chart.
No.
The funny part is, I think there's been a lot of well, if I don't get the call from the regulator in the first 6 months after I do this, then I'm okay kind of perspective. It's not how it works.
No. I mean,
there are digital receipts.
I don't even think what they did. I think the problem with what they did is the marketing side of it.
Right. It's not a unregistered security offering, blah blah blah. It is I think particularly it's an FTC issue where you're promoting something, and I don't know exactly how it was promoted or what was said. Maybe there was a lawyer advising, etc. But if you are promoting something and you have financial stake in it, there are laws around how you can promote that. End of story.
What can you do?
This was your object permanence tweet, which is that thing that you said on last week, which is so true. It's if it doesn't happen to me instantly, then I'm all good, and that's not how it works.
If you go behind a wall, that person no longer exists. It's the same problem. I don't believe that this is onboarding anybody new to this space. You cannot convince me that an $8 million market cap meme coin has done shit from a washed up Australian rapper. So
I think a lot of what this also looks like from a chart, just a macro chart perspective, is that bouncing ball chart of the energy is starting to fall out of the ball with each subsequent bounce, and it goes half as high as the previous bounce. $8 million, market cap. It's sweet. What do we make from that? And I think that a lot of the speculative fervor of these things is draining, which ultimately is a good thing.
Yeah, can we do a pulse check on meme coins generally? People are calling for a meme coin super cycle 2-3 weeks ago, and I don't know, it feels to me, it just feels like the weight of new meme coins it's every day that you see something that pumps for half a day now, and then I've completely stopped paying attention.
I mean, the winner of all of this is basically Jito. Like they're the people who benefit asymmetrically from like, it doesn't need to be Bitcoin A, B, or C. It just matters that they're happening and that there's MEV to collect. I mean, Dog we've had is at 3.5 billion FTV, which is actually pretty impressive, and Pepe is doing really well. But like, you're kind of now seeing this like flight to safety within the meme coin ecosystem.
What's the pumped off fund revenue? Do they still have that chart?
I think they've made 30 million in revenue so far. That's what I saw this morning. So like, they're cooking too. Like,
I think that's also one of the proxies. I mean, what the creation of new stuff is pumped off fund in my mind, and the trading of existing is Jito.
Yeah, I mean, they're both cooking. I think what you're seeing though is like, just based on how bad the new meme coins are doing and how strongly like Dog we've had and Pepe are performing, it just feels like people are like, okay, I can't play the long tail stuff anymore. Like, I just need to get into something that I think will go up, pretty reliably. Which
so then here's a good question: if they become reliable, latent, kind of boring meme coins, are they still fun?
Exactly.
And therefore, do you still have volume and trading activity and all of that? If it's a flight to safety, isn't that the entire antithesis of meme coins?
I mean, the
Anderson's paradox.
I don't know, but like it feels like the game is like developing a little bit. Maybe like the celebrity coins are the next ones, and like that does something else to it. But I think there is some sort of like just realization that there's probably too many meme coins in the aggregate being launched.
So what do you think that says for pumped up funds business? I don't know. I don't want to be a hater. I'm a supporter in general, but that just has the hallmark of something that has sprung
Probably
up
not much.
incredibly quickly. Yeah.
People are going to keep launching these things and, keep doing their thing. I think it's also like, you're going to see somebody like, I'm surprised we haven't seen a bunch of pumped out fund competitors yet. I think that could be part of the next chapter. Like the Kumbaya moment of like, all these things are working and pumped out fund's the only one who does it. And like, it feels like that's probably the most at risk.
I mean, in this analogy, are we talking about meme coins as this round's NFTs and pumped out fun as this round's OpenSea?
Could be.
And if so, is there a lesson to be learned from the OpenSea playbook?
I think the meme coins have more staying power than the NFTs just because they're more liquid. Like, and you can have faster price discovery. Like, it's taken a long time for Bored Apes to bottom. Most of the meme coins bottomed pretty quickly, after the crash, whatever. But I would say meme coins are just like a better mode of speculation, but that doesn't make them resistant to any of the market forces that, bricked NFTs in the day.
I agree with that. Yeah, I don't know. I don't know what's going to happen with the NFTs. I mean, I know we talked about that a little bit last week, but that's an interesting question, Michael, about the value of these, dog with hat coins is that they're fun and like stupid, and it's hilarious that it keeps going up and people get mad about it.
And speculation. Let's not forget that component. But like once you get to the point of it not moving 25% in a 24-hour period, and you didn't just turn, $500 into $50,000 and it's worth $3.5 billion. Like, is it that much fun anymore?
I don't know. I'm not sure.
What's the roadmap? And if there is a roadmap, is that a problem?
I think it's a problem. Yeah,
I think it's I mean, look, like I've had so many bad takes on meme coins that I would not be surprised if I'm wrong yet again. But more of the game is played out, and you can kind of see like it's when all those Uniswap dexes were forked back in the day, and it was like, which dex community do you want to be a part of? And then it kind of forced you to think pretty hard about why you would be involved in any of them.
Yeah, I mean, I also am not probably the person to, but it seems like these something that has value aside from just like the discounted sum of its future cash flow. It has to be this weird. It has to almost go in the opposite direction of utility. It's like something that's a luxury good, kind of like a Veblen good type thing. I mean, it's everything from like fancy restaurants where they charge you 10 times as much for a quarter of the food, to like designer brands where they're almost insultingly offensively expensive. And as soon as just imagine like Gucci trying to sell you based on like something that it actually does for you instead of like, this is cool, buy this, you pigs. It doesn't work. I think it is negative.
I also think that meme coins do stand the best chance at bridging the gap between basically like real world culture and online culture. And I know, I mean, it's cliche to say it, but it's like through the meme, it's actually relevant and therefore becomes like valuable. And if you can find something that is an early meme or an early concept culturally, you can latch onto that. I frankly think like, it's May 30th today when we're recording this, like there's not that much going on other than everybody like patiently awaiting jury deliberations on a Trump trial. Like there's not like a ton of crazy stuff going on otherwise. And so I think there's just like not really that much from a culture perspective. I mean, maybe there is, but when the biggest names were Joe Biden and Trump, like those are hilarious. And like just the fact that you can bridge that is I think a lot of the inherent value here as well. It just kind of like what's the next wave of memes that people are going to latch onto and build tokens around.
You know what? I agree that memes are interesting in that they tell you something about where the cultural zeitgeist is.
Exactly.
Sure. They're kind of like comedians, like you can kind of tell where power is located because it's whoever the comedians are making fun of, because otherwise they'd be punching down. I feel like memes tell you a lot about where the zeitgeist is at, and it does kind of bridge. Like honestly, I look at memes on Instagram or whatever as a way of being like, okay, this is how people are kind of thinking at the
totally. You can get a sense of the zeitgeist and the culture and the vibe through memes. Yeah. But the other thing that I think is unique about meme coins is you don't have to have artwork that's generated to be able to produce something. Where like NFTs, you had to build 10,000 pieces of art that people are like, oh, I'm just here for the artwork. It's like, no, I can just come up with a meme in like a random thought I had on a Sunday night and like, pumped out fun, created a token.
Well, you know what I would love to see more of these meme coins do if they're actually going to be seriously like crank more memes out. Like it's so, like Bonk, I think they were the original Solana meme coin. It looked like they were going to run away with the whole thing. And then they launched a DEX and a trading bot. It's like, no. You don't understand what business you're in here. Like crank funny dog memes out. That would have been way more bullish for
Bonk. But is it incumbent upon Bonk to do more memes or new tokens to do those new memes?
I don't know.
I mean, say what you want. Bonk is 3.5 billion and has like a couple billion of 24-hour trading volume today.
Totally.
Yeah, it's not too bad. Anyway, let's talk a little bit about. I want to get your guys' take on. So I just missed this, but I saw that NGMI. 0x NGMI retweeted it this week that Aave is launching its own chain, and ENS is also launching its own chain. There's been rumors, obviously unconfirmed, that Uniswap has been looking into this, and Makers Endgame obviously has them launching a new chain as well. And a lot of times when people talk about these big like ETH-based blue chips, it's like, oh, is this good or bad for Ethereum? But I'm more interested in the question of what is the value from the perspective of someone like Aave? Like I was interested to hear Aave was doing this because for me, like Aave is still a borrow and lend protocol. I would imagine it's critical for their business to be able to very little friction from people that have this massive crypto native store of wealth in the form of people that hold ETH to being able to deposit that ETH easily. And it feels like them having their own chain creates an additional friction there. And so I think it's kind of interesting to think about from the perspective of that, like, does this make sense for a bunch of these apps, or what's your guys' take on some of these big, DeFi 1.0 blue chips launching their own chains?
I mean, I would expect their revenue from selling block space to be less than their traditional business. So I think, like, from a fundamental perspective, probably doesn't do much for them. From a valuation perspective, I think to some degree they're taking what the market wants and regurgitating it back, which is they want infra. But like the more of people that do anything, the less valuable it generally becomes. So I think you'll see that. And yeah, I don't think like maybe the new chain gives them a new way to align incentives, but like it doesn't feel like it'll fundamentally change the trajectory of their business. But I'm like losing count of how many L2s ETH has at this point. Probably like almost 1,000. And I would say that's like on the margins bullish ETH. Just like more ETH locked up in these bridges, more ETH being paid in EA fees. And I saw a chart yesterday that was basically the blobs were full for the first time since Denkun.
Yeah.
And so I think like one of the things that we've talked about is like, when that starts to really work and when blobs are responsible for burn on L1, I think the market is just going to be, it'll breathe like a collective sigh of relief in the sense that like, okay, cool, the L2 roadmap works. And that will be like a major turning point for ETH in my mind. And that probably starts to happen this summer into the fall, but it definitely is happening in real time.
One question, point of clarification, is Aave launching in L1 or is it going to be an L2 on ETH?
I think it's an L2.
I think it's an L2.
Yeah. I mean, to further advance this point, like I think when the economics start to make more sense, where you have the ability to have infrastructure to get new capabilities, whether it's block space, block time, what that L2 is enabled, but then you also have lower cost based off of Denkun and blob space being what you're being charged. It's just better to be on your own L2, and like the infrastructure servicing is a lot easier when you control it versus when you're having to rely on something else. And so I think we're going to start to see the application specific L2 thesis be the continuation of the broader L2 thesis, and potential movement away from just like the generalized L2. Let's build on an Arbitrum so that we can get distribution, so that we can get usability, et cetera, et cetera. And maybe this is more in the direction of Superchain with Optimism, where you can just rip and kind of have a L2 that you stand up with the same tech stack and you're devoting 15% of your revenues back to it, but it's something that you can continue with into perpetuity.
The other thing I'll say about L2s is that like we are now seeing the start of the L2 roadmap for Bitcoin take shape. And I would say the results have been pretty mixed at best. Like Stacks has, I think, 45 million in TVL, which is number 1 for Bitcoin L2s, but would be number 24 for ETH L2s by TVL. And then you've had things like Merlin, which like was generally just like a multi-sig that people deposited into. And like we've heard about like these like backroom deals with, you put TVL on a L2 and they'll give you some sort of like, compensation for that. And it's like kind of this very insidery sharky game. But like I do think it is bullish when you kind of set out and say, we're gonna build NFTs, we're gonna build BRC20s, we're gonna build these L2s. But when they don't pan out to the same degree of ETH, I think that kind of makes you weaker, just optically. Like it didn't work. We didn't have enough people putting Bitcoin on these L2s. We didn't have enough engagement or enough community alignment. And so I think that could be a major headwind for Bitcoin. And like, I think what we're most hopeful for are things like Babylon and BitVM and other, I would say higher quality L2s on Bitcoin, and those have not launched yet. But the early batch has been kind of disappointing, honestly. And I think that dovetails with like runes and ordinals and BRC20s also fading a good deal. Again, we own we own a lot of Bitcoin, so like don't come after us. But like this is the truth.
I agree with that. So here's I agree with you entirely, Vance. But if I had to play the steel man here for why some of these Bitcoin L2s might actually have the right strategy, is if you think about what Optimism and Arbitrum did in the beginning, everyone kind of knew even when they were launching that ZK tech was probably the end game. But I think they correctly surmised, like, if we wait for that, we're going to be way behind, and let's just get something to market where we can start accumulating TBL and getting chains to build and all of that kind of stuff. And you could say that the Bitcoin L2s learned from the early versions of, obviously, Arbitrum and Optimism are 100 times more advanced than a lot of these basically multi-sigs that are happening in the Bitcoin ecosystem. But you could make the point that the same strategy holds, and it's just like, just get as much Bitcoin as you can and then build a tech stack later.
The problem with that is that the Bitcoin has like left these multis. Like there was large degree of community alignment around ARB and OP specifically when they launched that doesn't seem to be happening in Bitcoin land. And like something doesn't work and then TVL leaves and then it's like, how do we get it back? And then people realize that it's just 5 people depositing. Like I remember when everyone bridged their ETH onto Optimism, like we were, I think, half of the TVL in Optimism for a while. It was just we were putting serious skin in the game for as long as it took. And I just, we don't see that in Bitcoin yet. Hopefully it does happen.
I think it also comes down to the nature of the asset itself. For the almost entirety of the history of ETH, it's always been used as, a financial asset. It's been used either as payment for ICOs in 2017. It's been used as collateral asset in DeFi started in 2018, 2019. Obviously DeFi summer, it was the prime feature of everything in 2020. But Bitcoin has always been like I'm gonna hold on to this Bitcoin and I'm gonna keep it in my ledger and like I'm gonna keep my ledger in a safe deposit box and like I'm gonna come and check back on it in 100 years. Like it is not have the same characteristics from like the general audience, I would say, that you would see with ETH. And so I think that's going to be another headwind, just breaking that narrative.
Yep. Yeah. Well, congratulations to Babylon. I know, Vance, I think you mentioned them. They just raised $70 million today from Paradigm and a bunch of other. I don't know if you guys were involved in that one also, but
previous round.
Okay. Yeah, we're in the seed. But like those are like the highfalutin, tech approaches that are not just like these multi-sigs. And, like reserve judgment until like Babylon launches and gets going. I think it just says a lot about who the early ecosystem of like mobile Bitcoin holders are. And it's like kind of like this like same cast of characters that, goes from farm to farm without naming too many names.
Yeah, which names are you?
I mean, the Emperor,
His Excellency.
His Excellency.
I agree with that. I think there's also going to be some challenges just around. I'm not even technical enough to get into the nuances here, but Bitcoin is a much less performant chain than Ethereum. Just
10 minutes. 10 minutes is a while.
10 minutes is a long time, and
then the block explorers too. When you're like, wait. What did I just do? It's like, oh, okay, cool. Pick one still.
Yeah. Like, there's also just way less functionality on the base layer, like the UTXO model. There are a lot of drawbacks too. It's just going to be really tough sledding for a little while. But
I think there's also, it's also, I think, coincidental that a lot of these fundraisers happened basically between October when it looked like there was going to be a Bitcoin ETF, and basically up until about a month or two ago. And now that we've gotten the May surprise of the ETH ETF, everyone's back on L2s. And it's kind of like, oh, really? Just where did that come from?
Yeah, you're definitely right that it's not just a coincidence that. And there was also not as much going on back then. The market was kind of looking for a narrative. And yeah, I think
like Bitcoin L2s was a subcategory of investment for about 6 months there. Yeah. Like there were so many that were coming to market.
It feels like that's kind of died down too.
Well, everyone's now waiting to see what happens for the first crop to launch.
Right.
Like, okay, you guys just raised. Who's going to be first out of the gates?
What could be a wild card here is, this is really outside of my zone of competence, but it seems like stuff on the ZK front is moving a little bit faster than people thought that it otherwise would. I'm curious.
It's been moving quite slowly for some time now.
A long time.
But there have been movements at the U.S. Patent and Trademark Office.
Yeah, thank God.
Oh my God! Yeah, we got to talk about this.
Dude, like, so when we talk about that, like, there was literally a point in time where people were like, "Don't invest in roll-ups. ZK is like around the corner." This was literally like 4 years ago.
I was going to say at least like 2019 was that narrative.
And like some people like literally like didn't do any of the roll-up because they were like, the ZK tech is coming.
Yeah.
And this stuff just like, if you sit out at like because of tech reasons, that's usually a pretty bad choice.
Totally. And I wasn't paying attention to this back then, so I can't comment. I'm sure a lot of people were way wrong on it, but I don't know if you guys saw the announcement between Succinct and Polygon, their ag layer for SP1, but it's interesting because Polygon has this, they acquired a bunch of ZK tech. I think it was like Hermes or whatever that they acquired a little while ago. And they actually have a lot of great tech, and they're building the ZK EVM. And now what they're doing is announcing this partnership with Succinct's SP1, which is a generalized ZK VM. And the TLDR is that there's been one of the challenges for teams that are building in ZK is that you have to build these specialized circuits. And the specialized circuits are more cost effective and efficient, but it requires ZK gigabrains, and there are just very few people that can do that. They're super expensive. And what ZK VMs are is just much more general. I'm way paraphrasing here, but much more general, but much more applicable as well. And so, yeah, it's just interesting that they're going down this direction. And if they could make this work, it would be cool. I mean, that could be a big tech unlock, but you're right. It definitely, we have to wait to see it actually happen in practice, because it's been talked about forever. Should
Evaluate when live.
Yeah. All right. So we got to talk about ZK. So ZK Sync, it got, I think Starkware put out the original tweet that Matter Labs, which is the labs entity behind ZK Sync, the L2, was trying to trademark ZK, the word ZK. And the founder, Alex Glukowski from ZK or Matter Labs, responded that, yes, we're trademarking ZK, and it's not for any business reason. We're not trying to, put a ring fence around ZK or anything like that. What we're actually doing is protecting users, because, bad actors can co-opt ZK as a marketing message, and then people can get served bad quality stuff. I think everyone's been like, I don't know about that, dude.
We are officially trademarking ETH as well.
You don't need $5 every time you say it. I mean, look, is this even live? Is their chain even live? Like, you need to ship the chain. Stop trademarking shit.
Yeah.
Yeah.
Ship the chain.
It's very difficult to trademark something that generic. Also, I'm not even sure we can do that.
We know this.
Yeah.
It is. You can make an attempt to, but it's hard to get it registered. And then it's also like a weird process of who was the first to use it in like the wild, basically. And they kind of have preferential rights. So you have to prove that you have a more preferential status than they do. And ZK has been around for a long time. So expecting that you're just gonna be able to like trademark a 2-letter phrase that refers to a math equation, like it's just
shit. Flip the chain.
Crazy.
Yeah, that's gonna be an uphill battle. Well, also not the best PR of all time, but I mean, they're a good team. I agree.
This should go without saying, but like anyone who's relying on any sort of IP rights when it comes to generally software, but especially blockchains, which are open source, it's just like missing the forest for the trees completely. And, we should not be relying on either patents or utility patents, design patent, like that stuff should not be the basis of how you define, your moat. And I mean, this came out a couple weeks ago, and we don't have to touch on it too much, but like there's now a non-compete situation where you can't have non-competes, allegedly, as the FTC declared. And I think the waiting period is still live, but like that's another thing too. It's like that hasn't existed in California. So basically the entire software industry for the history of the last few decades has not been reliant upon non-competes to hold that to be true. But it is an interesting element of like, how do you define your moat? What is going to be your advantage, and how do you sustain that long term if you're using IP rights or trademark registrations or non-competes? Frankly, I just think you're missing it.
What do you guys think about something like the Uniswap business source license then?
That's expiring pretty soon here, right?
Exactly. Yeah. Three years from when they launched it, which I think was in 21.
Mm-hmm. I mean, at least they wrote code. They didn't just like patent parts of the English language.
Yeah. I'm sympathetic. I'm definitely with you on the. It's a really nice ethos part of crypto that you just shouldn't be able to trademark stuff like that. But I'm also sympathetic to like someone puts millions or tens of millions of dollars into R&D, and then
someone can easily just fork it. But I guess that's the pros and cons of open source. Right.
Well, look, I mean, there are, once again, open source license regimes, and you're referring to one as well. There's like the MIT open source. There's like there are ways to find alignment through an open source license regime. But what I'm more talking about is when you prevent people from using technology or accessing technology, or accessing it without a license arrangement. That's where I think you can't define a moat. And software has been that way for a long time, especially open source.
Did you guys see the OpenAI drama that happened a couple of weeks ago around non-competes? This was a pretty crazy clause. I've never seen this, but some employee basically whistle blew on them and said, hey, OpenAI's got these crazy NDAs where they actually claw back vested equity, which I was unaware that that's even legal to do, even if you acknowledge the claim that an NDA exists. And then Sam Altman was like, I had no idea about this, and backtracked and offered to refund it. It's like, you probably did know about it. What do we think of the cut of Sam Altman's jib? I don't know. There's a little...
It's diminishing. His jib is diminishing. I mean,
diminishing jib.
I think you use Perplexity too, right?
Yep.
I mean, Perplexity is the first AI app that I've been like, you know what? I don't really need to use Google anymore. And ChatGPT, you use it by comparison. You're like, tell me about this thing that I kind of know about. It spits out information. It's wrong. Like, if you didn't know that, what the answer actually was, like, you just take that and run with it. Like, I think ChatGPT is in trouble. And I think OpenAI is going to get absolutely clocked here by competition. That's at least my view. For the public opinion, like, going after ScarJo, who's like universally loved, whose husband is Colin Jost, who's like super Democrat, deep state. He did the
White House correspondence.
Like, you come for those people, like, they're gonna have a response for you real quick. And like, they're cloaked in the like creative artist rights movement, and they've just picked a terrible place to fight this battle and a terrible person to fight it with. So I think they're gonna get a rude awakening here in the near future.
I mean, it's gonna be the defining. Well, there's also a lot of details that we don't know, and so like the discovery process is going to be interesting, because apparently they had been working with this actor, for like 6 months prior to them coming to Scarlett Johansson 2 weeks before the launch and being like, hey, like, we kind of want to use your voice. But just the fact that they went to her is a recognition in my mind that they were doing something a little bit out of bounds. But it's going to be interesting if there's actually an actor behind this or not, or if it's really just like a voice, morphing of ScarJo, who actually created Sky. It'll be very interesting. It's also, I think, hilarious that they're calling it Sky, with an obvious connection to Skynet. There's the take that I think is going to be really important, especially with all of these AI companies, is how do you build the worker, like the employee-employer relationship? And what I think people are going to start to realize at these companies is that there are people at these businesses that have an unfair amount of information that is proprietary and incredibly valuable if in the hands of somebody else. And I think that there's a recognition historically in Silicon Valley that, there's a movement away from 90-day purchase period for your options if you leave the company. Now, if you're working at a Y Combinator company and you're there for 2 years, you have 7 years to buy those options. If there was this whole like, you can work from anywhere, but also if you work in the office, there's free food, there's all these amenities, and like you have all these nice characteristics, and like there's no non-competes. And that relationship, I think, has frayed. Like the social contract of people working at these like growth stage, especially, high growth stage tech companies, has frayed, especially here in San Francisco. And I mean, Vance and I talk about this a lot. It's like all the people who work at the like 100 to 300 person, like Series B companies that have, a 50x revenue multiple on their last valuation. It's like, it's gonna be brutal. But I think you're also going to start to recognize at these AI companies where individuals have that unfair, that like asymmetric potential to go and leave somewhere else and maybe start with the basic construct of, how to build ChatGPT, but for some other startup, or maybe go and work at Google on their search engine product. And that is going to be pretty difficult for those businesses. And that's the first time where you're going to start to see an even further push in the fraying of the social contract for these employees. And I'm not sure that like most of the people at those businesses are ready for that yet.
Yeah, it's been pretty easy to be working at a Silicon Valley tech company for a long time. There's been a lot of growth. People haven't been particularly concerned with margins or anything like that, and that's probably changing relatively soon. So, yeah, no more snacks, no more free cold brew, kiddos. Or maybe still free cold brew, but
yeah. I was listening to this podcast. It's called The Compound. It's like this TradFi podcast.
Oh, yeah.
Do it too. They were like saying the funniest shit. They were like, "What if there was what if the recession was already here in America, but like it just like wasn't evenly distributed? Like what if tech was like in a big recession and nobody noticed?" I was like, "You fucking idiots! Like tech is in like a depression." Like I don't know. If you're at one of those Series B companies, I'm hoping you're doing it because of the salary, not because of the equity. I think that's my takeaway. If not, just go join Google or something if they'll have you. Because they're not hiring.
Or hopefully you're doing it for the experience, not for the compensation.
Yes, the experience. Love that experience.
But I do think that OpenAI will continue to do well. I think that they will navigate the competition. Like Google has, an OpenAI size problem to fancy to use your phrase, but like it's real and they're coming at it. And I know OpenAI is going to come at it too. And I think this is going to be the way that Microsoft, like through basically a proxy war, competes more heavily with Google. Like that, it's going to get really interesting. But OpenAI is not going to go down without a fight. They've got, a $50 billion balance sheet.
For sure. I was more even just making a comment specifically about Sam Altman. No offense. I don't know him. I could be totally wrong on this, but he just has this tendency that I don't appreciate in people. He's very evasive and feels very media trained, and it just doesn't feel very honest when he's
Did you see the article that came out yesterday in Fortune?
No.
The reason why the board got pissed at him originally back, last fall, it's because they found out about ChatGPT on Twitter.
Surprise.
Like,
Jesus.
Oh, I've never seen that clause in that NDA ever.
Oh no, we're gonna create a ton of jobs with this product. There's gonna be no displacement of people's employment. Don't worry about that. It's just he sounds like a robot when he speaks, so I just do not trust him at all.
Me either.
Yeah, I mean,
my take is this is like this is basically like the frog in the water, and the heat has been turned on.
Yeah,
like, we're starting to notice it's getting warmer, but it's just like a couple more of these things, and we'll be at boiling point.
Look, the other thing is like. So Perplexity is raising at $3 billion right now. This is the OpenAI, I guess, competitor, but I guess they also use ChatGPT.
I think it's more Google competitor.
I'm just gonna say they're all competitors because I think they all eventually will be. They're competing for the same consumer surface area, but like Perplexity at 3, OpenAI at 98. Like the amount of funds that have been raised off the OpenAI win, and sure, some of them have probably sold because of like that. You need to get out at 10x or whatever. But like if OpenAI has like a down round, that's gonna be a very interesting look at some point, because that is kind of what's powering the traditional venture capital side of the world at the moment, is like this massive OpenAI markup for a lot of people.
How about Nvidia? It's AI on the public and private markets. Nvidia's at almost $1,200.
That's like what the hedge fund guys are eating off of.
Yeah.
Venture guys are not buying Nvidia shares.
No, for sure. But it's just funny that it's the same story in public and private markets. It's like I think their market cap got to 2.75 trillion.
Larger than the entire Canadian stock exchange.
Let's go.
I mean, there will be a time when that is. I mean, I do think that there could be a little bit of turbulence at some point for the whole Nvidia circus. And
How?
so the math is, so they beat Q1 earnings by 2 billion,
Right.
and then
Which
they
is
had
4%.
and then that beat elicited $500 billion of inflows into the stock.
Yeah, it's a runaway freight train, of course. But every single quarter they beat expectations, they reset guidance higher, and then they continue to beat it. And the stock is only a representation of where people think the stock will trade at this point. Like the fundamentals are not necessarily caught up with the value, but I think there's sort of like two paths, that play out right now. You continue to see this like predictable revenue growth and continued expectations beating. And this looks like Apple in like 2011, 2012, where like the iPhone is just humming and people vastly underestimated the size of that business. And that's how Apple became, the most valuable company in the world. But I also could see a world where they miss guidance and that sends a crescendo down. And it's sort of like musical chairs in my mind at this point. You will have a miss of guidance. You will have a crescendo down. It's like when you're in a bull market in crypto and you're in a bull market when you see 25% drawdowns in like a week, but then like it bottoms and then you come back up. Like we haven't seen that 25% drawdown yet in Nvidia.
We'll see. I think it's going to be a year or so before we're in that type of territory.
I agree. I think we're still in the infrastructure build out and everyone is buying H100s. Like, they don't have any other option.
Yeah. I want to close here just with a quick shout out back in our own backyard of crypto, which is Jito launched Stakenet this week, which is, I guess I should say I've got a small bag of Jito as a disclaimer, and I know Framework's an investor, but a longtime fan of Jito. Lucas has come on the pod now for many years going back, and I just feel like Stakenet didn't get quite enough attention. It's a very cool initiative that they've done, which is Stakenet is basically releasing this set of rules or contract logic that is useful for staking pool operators to manage their validator set. And so they've taken a bunch of stuff that's historically been managed either by DAO and in sort of like an off-chain and manual process, and they've put it on-chain and made it automated, which is super cool. It's also transparent, and if you're a data nerd and you like looking at things like validate, like where the validator set is and performance and stuff like that, just super cool. It's honestly a public good, I would say, for Solana the chain in general. The other cool thing about it is I think there's an opportunity to, one of the challenges and one of the centralization vectors of staking pools in general is that the pool operator has to basically check in on where the validators are. It's a very manual process of submitting data, and they kind of have to trust that the data is accurate. And so that's why Lido has opted for a whitelisted validator set for so long. But there's an opportunity, I think, with restaking where you could actually allow the validators to like put up some amount of stake and opt into some kind of slashing condition to make sure that the data is actually more trustworthy. So you could get much more trustworthy real-time data about like, downtime, geographical location, all that kind of stuff. So yeah, I just think the Jito team has been crushing recently, and this was a really cool product that didn't get quite enough eyeballs on it. So shout out to the lads of Jito.
Jito has some of the craziest charts in crypto.
Yeah.
That's one. Let's see. I mean, the main one is just the amount of the block they build, which is going up basically every week. They have this huge growth on their LST. And then they get all the tips and bundles from Mev on Jito, which is like kind of levered to the meme coin frenzy. But I mean, these guys are just executing. They're the flash bots, the Lido, and the eigenlayer of Solana. It's crazy.
Yeah, and you know how many of them there are? 14.
Yeah.
Yeah. Look, there's only 14 of us, so
Yeah.
Different story.
I mean, yeah, just wildly impressive.
Yeah, shout out to them. They keep pushing boundaries. It's awesome to see.
Very well done.
We should maybe do at some point. We did an episode with Eugene from Ellipsis and Lucas a little while ago about these different directions that Jito is going and Solana in general as their approach to Mev. But
There have been some more interesting divergences recently between Ethereum and Solana. It might be a good idea to do like a little check-in on different designs.
Yeah, there's like they're not going to do their burn mechanism. That's just going to be into validators. There's like the fee market like being left as is or like change. There's like a bunch of. It's probably worth doing a Jito refresh with like Solana's future roadmap. In focus.
Yeah, especially as Fire Dancer. I think that's still a little ways out, but that's also coming down the pike too. So
yeah, it'll probably be another 12 months or so.
Yeah. All right, fellas.
All right.
I think we can wrap it here.
Later.
Cheers, guys.
Later.
Bye.
Hey everyone, want to give a final shout out to this episode's title sponsor, Sei. Now, there are a whole bunch of really exciting reasons to be building on Sei V2 outside of just parallelization. I want you to head over to sei.io to looking into building on their public devnet. Again, click the link at the bottom of this episode and head over to sei.io to start building something today.